Hey everybody, hope everyone is doing well and had a good day. In this video, I'm going to review the Emini 5-minute chart for Friday, July 25th, 2025. I just quickly want to talk about the daily chart. Clearly, the market has been in a strong bull trend. If we look at this very simply, imagine going into the day, and here's the context. Also, remember that price action is fractal. It doesn't matter what time frame we're looking at. Market behavior is consistent. So we have this really strong breakout. You can call it a high 3, pull back to the moving average. And it's a period of sideways after a breakout. On a higher time frame, this breakout is simply one bar, and it's a breakout followed by a doji. And the expectation, this is basically a big, small, big on a higher time frame. So you have volatility expansion, volatility contraction, and volatility expansion breaking out in the direction of the trend. If we think about yesterday's bar on the daily chart, it's a relatively small bar compared to the average size of the daily range. And it's a doji bar, so it's a trading range signal. And generally, with the trading range, you want to buy low, sell high. So if we have a trading range bar for a stop order signal bar yesterday, you know it's a low probability sell below yesterday. The risk is small, the bar is small, so you know your risk. If you're risking just above the bar, the stop location is not very far, so small risk. And if you're selling below the bar, you're selling at the bottom of a trading range in a bullish environment. So you know it's a low probability trade if you're selling below yesterday. That makes buying below yesterday a high probability trade. And the only problem with that is sometimes the market doesn't get there, and instead it's better to buy the close because there's a sense of urgency, and that's what happened here today. But this is basically, these last 3 bars on the daily chart summarize what I'm explaining right here. This volatility expansion, volatility contraction, and volatility expansion again. Big, small, big. Of course, the second big bar, not as big as the first one. It's a much smaller bar, but it's trend resumption in the direction of the bull breakout. And once there's a pattern like this, you kind of see it everywhere. Like, for example, I was showing the past 20 or 25 days. Here's the 45-minute chart. And here's the past 3 days. Here's the 23rd to the 25th. And it's the same pattern. You have a period of strong bull trend, volatility expansion. Then a fat area, as Ali explained it, volatility contraction, and then a breakout in the direction of the trend again, volatility expansion. And you see the same pattern repeating here on the 5-minute. To zoom out and show what I just showed on the 45-minute here, it's kind of like this. Lines may not be perfect, but it's close enough to demonstrate what I'm talking about. Volatility expansion, period of sideways, and then trend resumption. So we see this same pattern repeating on the 5-minute chart, even just today. Obviously, the market opened in a trading range. We look at the context going into the day. Clearly, the market is in a trading range. Also, the opening range was relatively small. If you take the average of the past 10 or so bars and compare the opening range size today to that range, And usually using the first 12 bars is sufficient for the opening range. Here the opening range was 8.25 points. If I remember correctly, the recent average daily range is about 40 points. So that means the opening range today was about 20% the size of a recent daily average. When you get a small opening range like that, that's 20% the size of a recent average daily range, the odds of a trend day increase. You know there's probably going to be range expansion. The day is probably not going to remain within the opening range, which is 20% or 1/5 the size of a normal bar. But also we're in a strong bull trending environment, which also backs up the bull trend day case. And then here's the pattern that I'm talking about, repeating over and over. You have this period of more tight bull channel, especially here. So bar 8 through 16, volatility expansion. If we go one time frame higher, you would not see the pullback. So bull breakout, pause, and then second leg in the direction of the trend. And the pattern repeated one or two more times. You can see it right here, the fat area, volatility expansion, volatility contraction, volatility expansion. And then maybe a little bit right here, but not so much the triangle shape. This is more of a high too. But to summarize what I saw today, just quickly, the market opened, like I said, in the tight trading range. Most days break out above the high or below the low of the prior day. And I said, if we get below the low of yesterday, there's probably buyers down there. Here's yesterday's low. But tight trading range on the open and then a bull breakout. So pretty decent rally from bar 11 to 16. But it might be a late leg. It could be 3 legs up. Maybe it's 1, 2, 3 legs up with a couple of pushes here. So this might need to pull back before the bulls get resumption. Also, we're at the top of the bigger range. But the reason I showed the 45-minute chart is that this period of sideways, this trading range we see on the 5-minute, is a pullback in a bull trend. And if it's a pullback, if the trading range is a pullback, it's a bull flag, you expect the bull breakout. You expect trend resumption. That doesn't mean it's necessarily a good idea to buy at the top of the range. It's more ideal if you can buy a pullback. But I mention that because if you're trading in the trading range, it might be a better idea to trade in the always in direction. So maybe you only look to buy, and when the market goes toward resistance, you look to sell out of longs. But selling to go short is a little more aggressive when the always in direction is long. It's not as aggressive here. This is a very broad bull channel. If it is a bull channel, periods of always in short, maybe here, definitely here, and always in short through here. Breakout in second legs, tight trading range on the open, 8, 9, 10, 3-bar micro channel, likely to get a second leg. Bar 10 is a bad stop order sell signal bar, so there's buyers below, and you can see we fell below that low in the low of 9 and then reversed back up. Though the bulls got their second leg. The second leg was bigger than expected. The minimum target is the high of bar 11, and the bulls broke far above that and got follow through. This might reset the leg count to some degree, but it is a third push up at the top of a trading range, so minor reversal expected. So if you buy here, you know you're probably going to sit through a pullback, but if you buy here and use a wide stop, and especially if you're willing to scale in, you're probably going to make money. 3, 4, 5, maybe 6-bar bear micro channel. It's weak. There's a lot of overlap and doji bars. Where are the consecutive strong bear bars? They don't exist. but it's enough price control and time control. It's not great price control, but it's enough time control to disappoint the bulls who bought up here. So the bulls who bought the close 15, bought during 16, disappointed by this pullback, may look to exit and look to buy lower, which is what's happening on 22 and 24 when the market retests this area. The bears probably will get a second leg. The bears got a complex pullback, so bear breakout, one leg against, second leg against, and then the bears got their second leg. But now we have a high 2 in the bull trend. Is it a bull trend or is it a trading range? This area is tough because if you look to the left, clearly the market looks like it's in a trading range. But if you look closely, the market is creating higher lows. Here's a low, higher low, higher low, high, higher high, higher high, and we might be heading up to make another higher high. So the bulls still have the argument that this is a broad bull channel. It's a bull trend. Also through here, the bulls controlled price above the moving average for at least 10 bars, getting 10 or more bars consecutively closing above the EMA, which is a sign of price control by the bulls. And also especially through here, the channel is fairly tight. And now we're getting a high 2 pullback near the moving average and the trend line. Bulls will probably at least get a test of the bar 16 high. That's their minimum goal. Breakout, pullback, test the highs. But also yesterday's high is fairly close. We don't have a major reversal pattern, so as far as selling, it's aggressive. It's a low probability sell. Even though the bears have a 3-bar micro channel here, you can call it a second leg down. It's against the market regime. It's not really breaking out of much. It's within this tight trading range. So the bears really need one more bar to convince traders, kind of like bar 27 on 28, or bar like bar 7 or 11, that we are flipping into always in short. The channel is evolving into a trading range. We're getting the bear breakout, but they didn't get it. 28 was a strong reversal up, high 2 in a bull trend. Traders selling, probably exit above 28. Bulls can buy, minimum target, like I said, the high of the day. But I also said most days break out above the high or below the low of the prior day. So the bulls have a target at yesterday's high as well. Follow through buying, 3-bar micro channel. 30 is a bad sell signal. Buyers below, second leg up likely. So there's the weak sell, and there's buyers below. Bulls getting their second leg, and we test the high of the prior day. There might be some profit taking here, and again, it's that pattern of volatility expansion, volatility contraction, volatility expansion. And after a bar like 33 testing a magnet, we might need to pause. But pause does not mean reverse, so there might be a minor reversal because of profit taking by the bulls. But until the bears break a significant trend line, the bull trend is still in effect. The bulls have open gaps. If you look at the breakout point above bar 11, the market tested it a couple of times but never closed below that high, or closed below the high close. If you look at the line chart that plots the close of each bar, the market did not close below this line. So bulls are controlling price, open gap down here, open gap here, possible open gap being created here. And then follow through buying. There's a minor pause, but a bad sell signal bar 34, and the bull breakout continued. Might have reset the leg count. Strong enough breakout that there's probably buyers below 36, and a second leg up is likely. Weak sell signal, but now entering a tight trading range. Volatility expansion, volatility contraction. Always in long. We may have to test a little lower, but the bulls are still in control. It's always in long. We're probably going to get at least one more leg up and test the highs. So buyers below 39, 40, 41. And there's that triangle shape. Volatility expansion, volatility contraction, probably will break out to the upside. Failed breakout up, failed breakout down, but strong reversal back up. Bears never got their follow through. They broke below the trend line, but bulls reversed back up strongly. And then a kind of a representation of this right here, 47, 48, 49. Big, small, big, big, small, big, big, small, big, and the big picture. Big, small, big. So there's that repeating pattern over and over. Tight trading range like this, late in a trend, we're 30 or more bars into a trend, it might be a final flag. The market might have to come back and test the breakout point. This might be a triangle final flag. But this breakout is strong enough that it probably needs its own second leg, maybe even a third leg. 50 is a weak sell signal, but bear bar closing on its low, late in a trend, far above the EMA. For me, it's a default exit longs below 50, but you can re-enter above a bull bar like 51. Second leg down, probably buyers at the 51 low. Second leg up, still likely, testing the breakout point, high 2 by 55. Signal bar not all that strong, but nested, 2 legs down, 1 pullback, 2, 1 pullback, 2. It's a reversal bar, signal bar, so not a terrible stop order buy, 55. Bulls will probably at least test the highs. And this looks like a minor reversal, not a major reversal. 57 testing the highs. 57 testing the highs, but will probably pause or reverse here. We still have the triangle down here that's probably going to get a better test than 54. We're getting late in a channel phase. 1, 2, 3 pushes up. Late in a bull trend, like I said, at this point, 50 bars into a bull trend, 60 bars in. Bulls having a hard time breaking out. Second reversal, 61. 64, nested, low 2, low 1, low 2, but 2 pushes up here. Reasonable to exit longs below 64. Aggressive to sell, but the equation does make sense because you're getting good risk reward. And the structure is okay because it's leg 3 with a couple of pushes in leg 3, late in a trend. You're also getting late in the day. Sometimes you get a profit-taking sell-off late in a bull trend on a bull trend day. Institutions taking profits on longs. They've been buying all the way up, and toward the end of the day, they need to take profits and reduce risk, and that can create a sell-off, which might be what we get here. 64 through 66, strong enough bear breakout for a second leg, but if you're selling 66, stop above 64, it's a bad risk reward, and you're selling right at support. There's probably buyers here. What happened back here? 57 broke out, trapping traders at the 55 high. We're retesting support. There's probably buyers here. It also might be 2 legs down, 1, pullback, 2, high 2 at the moving average and a bull trend. If you're selling here, you cannot put a stop above 64 unless you're very quick to exit, because there's probably resistance above 64, which means if you're selling here, stop above here, your stop to buy back shorts is exactly where strong traders are selling, the top of a channel or a developing trading range. So terrible entry bar if you sold at close 66. Like I said, high 2 at the moving average and a bull trend. Signal bar closing on its high, similar to 28. And you can also say 47. If you're short, you just exit above 67. Bears were probably going to look to sell higher. Strong enough micro channel for a second leg, but the pullback can be deep. One, two, three legs up. So buying here, dangerous. You're buying late in a channel, leg 3, and possibly the top of a developing trading range. So this might be a bull trap, trapping traders into buying too high. 71 strong bear bar, second entry short, better double top than 59 and 64. Strong signal bar. Bears have a swing short. You cannot take this trade for a scalp. There's less than one ABR, average bar range to the moving average. You need at least 2R on this trade. But the structure makes sense. The context is okay to get a test back down here, because if this is a spike in channel, we can test all the way back down to the start of the channel, which might be here, might be all the way down here. So the bears have a swing trade argument. And the bulls, if they're still long, they probably exit to go flat below 71. Not a great entry bar for the bears, but also not a good buy signal. There's probably sellers above 72. 3-bar micro channel, but not very strong. There's no micro gap, no consecutive strong bars, doji 72. So we may have to pull back, but it is a 3-bar micro channel and not good context for buying because we've already had 3 legs up. So if you're looking to buy, you're looking to trade leg 4 late in a channel, which is really not ideal. More likely, we'll get a couple of legs sideways to down after 3 legs up in a channel. Especially with all the two-sided trading developing, this channel will more likely evolve into a trading range. So maybe there's a channel, we're testing the trend line, there's probably support. So probably not ideal to sell the close 73, but probably sellers above 73. Market testing, breakout point, 70 closed. Bulls who bought the close got trapped on 71. And this bar might be relieving those bulls who bought. So you buy the close 70, you're trapped. You buy more below 69. The market gives you your break-even price. 3-bar micro channel, pullback, 75 might be the start of a second leg down. Tight trading range, end of the day, not ideal to be trading at all. Breakout direction here, probably 50-50. Bears get the breakout, testing that breakout point, but closing below, and it's a strong bar. After breakout mode, tight trading range, closing far below many bars to the left. This might reset the leg count, so this probably needs a second leg down of its own. And we got follow through, selling to the start of the channel, bar 47 low. This still might need a second leg down, but 78 was a pretty big reversal up, so maybe we test the buy zone 78 and then reverse right back up. So 79 testing support once again, but strong bull trend context. The channel evolved into a trading range, and now we're testing support, so probably buyers below 79. And then just the end of the day there, a little bounce, but out of time. So overall, very interesting day with the repeating patterns. And that's going to be it for today's review. So thanks everybody for watching and listening, and I hope everyone has a good weekend.